There we go. So with this 2-hour supply zone that we have, we also had formed a 15-minute supply. This is the market structure that we saw yesterday in the morning that actually helped us catch this short position on ES for a nice quick move lower. And obviously that thing continued for a while. So with that being said, because we created that on the 15, but on a higher time frame, a 2-hour, we had our basing candle. We had our huge sell-off. This is a crazy strong move. Now, we didn't have the continuation, right? So we did end up stalling back for a little bit. But we have to always take in for a matter of fact and take into just some thought, right, that markets have been bullish. So we're not going to get a real strong continuation, right? And if we do, great, fantastic. But regardless, this was a nice basing area after we swept a high. So there, boom, people trapped in long positions. This is two times people trapped right here. It's previous day high, and we swept a previous day high, right? So this is a very strong area of interest. This is where a lot of people are spectating markets to possibly break out and continue. Therefore, when we had that 2-hour supply zone form on it, this is our high probability zone of today. What's great with zones like this and supply and demand in markets like this is we are sort of in a risk off, and I'll show you guys market sentiment at the moment. Let's see, we'll do -10. Check our trending news, anything important. We'll tell you about jobs to be eliminated in 4 or 5 days, huh? We'll be talking about Gaza with Carney. So we do have a bit going on, but this was 20 hours ago, so don't be expecting this news itself to be impacting the market. However, if you're talking about, we'll tell you about jobs to be eliminated in 4 or 5 days. Okay, well, that's something to possibly keep an eye on, right? Keep an ear out for, keep the news circulating, see if we see anything. What I wanted to show you guys, though, was more of the sectors. So check out our sectors, our capital flow down here. Investors are fleeing broad U.S. equities and tech sectors while rotating into defensive staples, energy, utilities, gold, and financials, signaling risk aversion and flight to safety, right? We know safe havens. Gold is our safe haven. Global liquidity favors safe haven assets amid market volatility and uncertainty. As we see, safe haven, gold is our strongest safe haven right now. Our market AI sentiment index is right here. This is sort of the sentiment index I like to use in the mornings. Equities are mixed with tech weakness and defensive flows into gold and bonds, while ETF inflows show selective risk appetite and macro uncertainty. So tech profit concerns, stocks fell as reports raised doubts about AI profitability, dragging tech-heavy indices and sector ETFs lower. Now, I made a video recently, guys, and if you're not following me on either YouTube here for Bullish Bears YouTube or my personal Instagram or the Bullish Bears Instagram, you would know that NVIDIA has recently been investing hundreds of billions of dollars into companies like OpenAI, into companies like Oracle, and then those companies turn around and use that money to buy NVIDIA chips. With that being said, could their revenue be inflated, right? Because their money that's going out is coming right back in. So the money that they're counting as coming in could also be that money that's going out. So it's sort of inflating NVIDIA's price. You know what I'm talking about, Jeremy?
Yeah, and there's a word for it. I can't remember.
Circular
they're financing
revenue.
their own. Yeah.
Let me see. I had it. Let's see. It is... Goldman Sachs just issued a warning for NVIDIA, yet analysts are calling out something they call circular revenue, where NVIDIA funds AI startups like OpenAI, and that money loops right back into them for chip sales. But they still raise the price target, saying that the deal strengthens NVIDIA's dominance, which does make sense, but, you know, fine line between dominance and legality of, you know, washing money back and forth. But it raises the real question, is it organic growth or is it just financial recycling, right? NVIDIA's already just packed with money. Are they going to continue this? Now, they did mention that circulation of money probably only makes up for about 15%, but that's still a good chunk, in my opinion. That's still billions and billions of dollars. With all of that being said, where are we standing today? AI sector rally, that would give us some strength. Fed rate cut expectations, that should also give us strength, right? That should boost risk appetite. Government shutdown was the only thing really signaling a little bit of an issue. And of course, inflation, geopolitical risks, that would also be an issue on a bull trend. Let's see. So something I'm looking for on ES today, I'm looking for a few zones. I'm looking for zone number 1 is supply. I'm looking for zone number 2, which is broken demand. And I'm looking for zone number 3, which is a tissue for Jeremy. Soon to be broken. So you guys see I'm saying soon to be broken demand, because I am expecting this to get broken hopefully today. So there's really a few things I'm looking for, right? We either get the rejection here, so let's say make some highs, pull back, a lower high is formed right here, we break lower. If we could get this break, if we just open up, New York session opens up and we sell right off, I'm using this demand zone as resistance and we're going short there, looking to target 67.08. We're looking for a pretty big move on ES to the downside. That's about 40 points, but that's not that unreasonable. We just had that move yesterday off the New York Open. So do markets want to repeat themselves and give us that same thing? We'll have to see. So this is setup number 1 that I'm looking for. Setup number 2, if we can, let's say markets open up and we chop off of the zone a little bit, or let's say we're even looking at Bookmap and we do see a strong seller at 67.75, I will try a stab at a short position there, looking to target that new low of day. So you see how this trade setup has me targeting all the way down here, while this trade setup has my first target being, well, not new low of day, would be previous day's low. So previous day's low. So the first trade setup would give me a larger target if markets are already giving me that momentum. The second trade setup is really just me trying to trade that range. The third trade setup that I'm looking for today would have to be a pullback to the supply zone. Now, if we are able to pull back to that supply zone, guys, what can happen is we could create a lower high. So at this point, we've been making higher highs, higher high, higher high. Even this high right here where we created the supply zone was technically a higher high because we swept out this high right there. With that being said, if we can pull back, let's say we made that higher high, pull back into supply, but do not break previous day high. We do not break that level. We hold this resistance point. I'll look for a short position in that supply zone, possibly looking for new low of day, looking for a real strong move, a similar move to yesterday's price action. So that's the 3 setups I'm looking for, each of them lining up as a short position. However, I won't be hesitant to change my bias if markets do want to develop and give us a different kind of reaction. Gotta remember, we are still near not even new highs, not even a bull market, but we're at all-time highs. We're very bullish. With that being said, too, a lot of people are a lot more hesitant to buy up here. That could also sort of not encourage selling, but put a damper on the buying volume. So let's see. So those are the few trade setups I'm looking for. If, however, I was just mentioning, I would flip my bias. Buyers do step in. Only way I'm doing that is if we're able to break the supply zone, break that previous day high. I will then look for a pullback towards, you see how we have the 2 hours marked out, this 67.91.5? This is a key level. So those are key levels. The demand zone down here, 67.55. Top of demand is a key level. Bottom of supply is a key level. So I'll look for a pullback. I'll possibly look for maybe a 15-minute fair value gap to line up with it, a low volume shelf to line up with it. That pullback will be my entry, and that will be